Okay, hi everyone, this is Kevin from FSMOne Malaysia. It's nice to see you all here, and I will be the speaker for today. So without further ado, let me share my screen first. Hi, just want to know if can you guys see my screen? If cannot, please post your feedback or comment in the Q&A section so I can know is there any technical error. Okay, since there is no question, so I think that everyone is able to see my screen here. So I'll start my presentation now. So once again, hi everyone, it's Kevin here from Malaysia Research Team. It's nice to see you all here, and it's my pleasure to introduce our FSM1 recommended funds 2022-2023. So for those who are not familiar with us, just for information, FSM1 will come with a recommended unit trust list every year to provide you some insights and options when you have no idea which unit trust to buy. Before we start, just a quick disclaimer. Today's session is just for educational basis and it's not an investment advice. Should you have any inquiries, you should seek for an advisor to have a more comprehensive view, or you could seek for the assistance from our CIS client investment specialist. So a quick market review in 2022. I believe that is kind of tough market in the past while, lingering concern due to overheating inflation, recession risk, monetary tightening, geopolitical tension, etc. However, we do see that there is an opportunity for the long-term investors to take advantage, as you don't really see the market valuation at such an attractive level so often. I still remember last time during COVID-19 era and US-China trade war in 2018-2019, the market is also struggling in a gloomy sentiment. But when the time goes, market will eventually price in the negativity, and that is where the inflection point is. One thing I do want to share with you here is, as an investor, we always need to look ahead to the market. So today we are improving digitalization. The news move very, very fast, and the market no longer reacts like 10 years ago, 20 years ago. Let me give an example. Generally, during a rate hike, equities market wouldn't be perform well. So theoretically, equities market should have a negative correlation with announcement of rate hike. However, as you see recently, the market absorbed the news very, very fast, and it has already priced in the negativity way before the announcement. And although I don't have data here, but if you look at the dot plot from a dot plot chart, which is reflect how the market priced the rate hike, you can already see the market has already priced in by 2023 and 2024. There is a rate cut forecast there. So before our rate hike hit a peak, market already priced in a rate cut. So we do not deny the fact that the market recently is in a kind of negative sentiment. But if you look ahead to the market, there are still plenty of opportunities there. So back to our topic, our recommended unit trust. There are 700 plus unit trusts on our FSM1 platform. So sometimes it may confuse you guys which unit trust is a suitable one and a best chance for you to invest in, want to invest in certain regions. Hence, we research team have come with this recommended fund list 2022 and 2023 for you here. But the question is, how are we going to determine which are the recommended unit trusts? So first, we segregate all funds in our platform by category, including classes, regions, sectors, and etc. We're going to input historical data using our quantitative model, which is full of statistic data and a qualitative view to come up with a final 44 recommended funds this year. I will first explain what is our quantitative model. So our methodology of fund assessment is quantitative mainly, where funds are assessed based on historical performance, risk, and expenses. In terms of performance, the most objective way to determine the quality of a fund manager is to assess the fund's historical performance, which is one of the factors we weight heavily in our fund selection exercise. For this, we consider both a magnitude of performance as well as the consistency of returns. So what is the consistency of return? Let's say, for example, a fund that generates 100% per annum in just certain 1 year, and it will eventually affect its cumulative return in the next few years. So some of the indicators we use, including a calendar year return, cumulative performance, and average rolling return over a different time period. I believe that a calendar year return and cumulative performance is kind of straightforward. So I will slightly elaborate on what is the average rolling return over a different time period. So what's the average rolling time return is basically, let's say a fund has a 5-year time frame and invest in a 4th year or 3rd year or the 2nd year until today. So what is the return if you invest in each different time frame? So that's what we call as an average rolling return over different time period. In our recommended funds, we only recommend funds which have at least 3-year track record. And in the case of a new funds which fits into their overseas target funds, we have a longer track record. We may access to the target fund performance as a proxy. For risk, instead of purely using standard deviation as a measure of risk, we believe that it's more appropriate to focus on how well a fund holds up during periods when the relevant market saw a substantial decline. So as such, in our assessment of risk, we focus on the maximum decline over the fund on a given period, which as known as the downside volatility. In more layman terms, let's say you are so unfortunate you have a fund on the peak and it dropped its bottom. So what's the volatility and how much we have lost in a certain period? So basically, what this tells us how volatile funds over a period when it's losing a value. While the expense ratio is what investors pay for the management of their fund in an annual basis. So this is straight away deduct from the value of unit trust and takes into account for the operating expense that the fund accrues, including the annual management fee, administration costs, as well as trustee and custodian fee. So generally speaking, the lower the expense ratio, the better it is for you because you are incurring a less cost. Well, for equity funds and balance funds, usually they track on a well-known stock market benchmark, making it easier to compare a funds invested in a similar region or country. So as such, we have assigned a 60% for performance and 20% for risk and expense ratio respectively. Meanwhile, for the bond funds, usually they are less comparable between funds. So given the differentiated focus on the credit, on the country selection, currency, duration, so to reflect on the basis of a stability in the fixed income investment, assign different weightings to the 3 quantitative parameters as shown above, where 40% for performance, 30% for risk and expense ratio. Well, for in addition to looking at above mentioned quantitative parameters where we build a static model to rank which one is a better one, which one is a not that good one, we also consider the other qualitative factors in our analysis, including a fund manager's consistency in their investment approach. So the fund size as well as the stability of a management team. We also incorporate our outlook on the fixed income market to assess the merits and disadvantage of a bond fund. So just a reminder that as we take into account of the qualitative factors, the highest scoring fund based on the quantitative assessment in the particular category may not necessarily be the fund that we recommend, although the fund performance remains a significant factor. Let me give you an example. Let's say a fund that ranked number 1 in our statistic model, but we also take into consider that how is the fund holdings, what is the fund size, how consistent the fund manager is able to generate this kind of return, and so on. So after the brief explanation on how we evaluate the funds, we will now enter to our topic, recommended unit trust 2022 and 2023. Some of the new categories I think worth to mention are Water Team Global ESG, Manulife Global Aqua Fund, which fits into the BNP Paribas Aqua Fund, is a winner for this team. So ESG has been a hot topic in the recent years, and we do think that it will continue to be in a rising themes in the coming future with rising awareness of this kind of sustainable topic. For investors who are more conservative, we have introduced a new category, Global Balance Fund, with RSB Global Allocation is a winner in this category. So this one is a feeder fund which fits into the BlackRock Global Balance Fund. And for those investors who are looking for the Global Fixed Income Islamic, we recommend MAMG Income I, which is a feeder fund that fits into the AZ Multi-Asset MAMG Global Sukuk to provide more options for investors looking in this category. In line with our all-weight call for Asia and ASEAN, we have introduced a few new categories, including ASEAN equities, Asia ex-Japan small cap, and Malaysia focus as well. For ASEAN equity, based on our relation, we recommend principal ASEAN dynamic equity, and for investors who are looking for Sharia compliant ASEAN equity, they could consider Satuna ASEAN equity. You will ask me, what's the difference between Malaysia focus category and Malaysia? Well, Malaysia focus is a category which the fund is heavyweight on Malaysia, while able to gain some exposure to other regions. I will take the winner for this category, Kenanga Growth Fund Series 2 as an example. So the fund manager is roughly 70% in Malaysia equities, while 60% in other regions, in other ASEAN regions, including Indonesia, Thailand, and Singapore, while have some little bit exposure in the US equities. So this time around, we have total of 60 funds. We have total of these kind of funds on our list, spanning across both equities and fixed income, in PRS with exposure to a wide range of countries and regions across the globe. So as you can see here, most of the funds on the list has demonstrated a strong long-term track record, and most of the funds have made back on the list for this year, indicating the consistency and quality of our recommendations. So the table is an overview for our core category portfolio funds. As you can see from the funds on the right-hand side, most of the funds are still last year winner. If you notice there is a word new in the red color beside the fund name, it means that the fund is a new winners in this year, and the black logo, which has an EPF word, it means that it's an EPF approved fund. So some of the key points I think worth to mention this year are the Manulife Global Thematic Fund, which is a winner for Global Core Equity, and Affin Hwang Equity Fund, which is a new winner for Malaysia Core Equity. In the next few slides, I will briefly talk about those new funds that perhaps you guys are not very familiar with. So I will start my fund introduction with a Manulife Global Thematic Fund, which is a feeder fund which fits into the target fund Allianz Thematica Fund. Although its name consists of this word thematic, actually it's not really a thematic-based fund where the fund manager has limitation to invest in certain sectors. So the word thematic in this fund refers to what a fund manager thinks the suitable investment team in the next few years. In order to get the most those info that you can't get from their report, we have met with a fund manager earlier, and based on him, urbanization, technological innovation, resource scarcity, and demographic changes is unavoidable megatrends that we should not leave. And some of the team allocation to cope with this are the next gen energy, infrastructure, digital life, clean water and land, and health technology. So this portfolio aims to hold between 5 to 7 teams, and the exposure for each team is expected to range from 5% to 25%. Well, Affin Hwang Equity Fund is the new winner in Core Malaysia Equity category. Just for information, we introduced 2 funds in our Malaysia category, which is what the other winner is Khaw Fund, which is also a last year winner. So based on its latest fact sheet, the fund has higher allocation in industrials and a very high cash holding, as you can see from the fact sheet. Based on the fund manager, currently they are taking a conservative approach, and they will deploy the cash once they have discovered any good timing to enter the market. So some of their watching lists are communities, especially plantations, banks, and reopening beneficiaries such as consumers, hospitals, and EMS sectors. Okay, so meanwhile, this year we have added new names in the Malaysia Fixed Income and Malaysia Islamic Fixed Income, which is a Manulife Investment Bond Fund, and which is a Manulife Investment Bond Fund. And for the global balance, we have recommend RSB Global Location Fund. Meanwhile, Principal Asia Pacific Dynamic Mixed Asset Fund is a new winner for Balanced Fund Asia ex Japan. Well, yeah, similarly, I will briefly introduce what is a new winner. So Manulife Investment Bond Fund is a new winner for Malaysia Fixed Income category. The fund focused on the high credit quality bonds, and currently they are looking to take a balanced approach between the long duration and short duration bond portfolio based on the fund manager. So the fund manager also thinks the Malaysian bond market will continue to be supported by local market dynamics at current valuations. With that, they are staying nimble on their portfolio positioning and adopting an active tactical strategies in government bond and high quality corporate bond. In the past few months, they have increased exposure in long-term government bonds to push the duration of their funds slightly higher. Meanwhile, for sorry, there's a typo there. This one should be the global allocation. So the global balance fund. So RHB Global Allocation Funds, which fits into the BlackRock Global Balance Fund, is a winner for global balance category. So they are overweight on equities than a fixed income at this moment. And in terms of equities, they favor China, Europe, underweight Japan, US, and Australia. Sector-wise, they favor energy, materials, and consumer discretionary. Meanwhile, for fixed income, they overweight high yield credit, investment grade credit, and securitized debt, while underweight on a developed market government bond. One thing to note with also they are holding quite a high portion of cash as well. As mentioned earlier, we have added quite a number of regional and country sectors in our recommended fund categories this time. For ASEAN equity, we recommend principal ASEAN dynamic funds, while for those investors looking for ASEAN Islamic portfolio, they can consider Satuna ASEAN Equity Fund. Europe Equity Growth is a new fund which we just onboarded early this year, and it has become our new recommended fund for Europe category. For investors who look for a China market, which is one of our favorite markets this year, consider RHB Big Cap China Enterprise Fund. For those investors who look for the Greater China can look for Principal Greater China Fund, and those investors who look for the Islamic China can look for East Spring Investment Dynasty Equity Fund. Principal ASEAN Dynamic is a winner in our new category ASEAN. So basically, this fund is taking a barbell approach of a cyclical, benefiting from a reopening themes and growth stocks. Meanwhile, one thing to note that this fund has a relatively higher exposure to the financial stocks, which are giants among most of the ASEAN stock market. Also, the fund manager highlight that ASEAN market has seen a positive structural change in the last few years, with more opportunities in the long-term strategic and structural growth teams, as more and more new economic stocks be listed in the ASEAN public equity market, as you can see, GoTo merger last year in Malaysia and Singapore as well. So they continue to like structural growth teams of ASEAN, which includes e-commerce, Vietnam, technology and supply chain shift, which focus on the quality growth companies at a reasonable valuation. Well, for ASEAN Islamic, we recommend Satuna ASEAN Equity Fund. In terms of portfolio positioning, the fund manager tilted towards a small value stock, and diversification plays an important role based on the fund manager. So the themes that the fund manager focusing on, including inflation, supply chains, interest rate, and some of the allocation basically is including climate, infrastructure, green buildings, big data, smart vehicles, and aging diseases. Well, RHB Big Cap China Fund, which is a winner for China category, is based on some of their favorable growth, including a favorable structured growth, such as energy, industrials, and technology sectors. While furthermore, in China, you can see some supportive policies for the technological innovation, and we have an emphasis to strengthen the technological innovation and industrial supply chain resilience. They have also anticipated continued loosening measures from China, given a slowdown in property sector. While for Greater China Principal Greater China Equity Fund, we do recommend Principal Greater China Funds. The fund manager stated that despite the heightened geopolitical tension and some unfavorable policies, including a zero-COVID policy, have hurt the market, they are expecting a greater policy stimulus over the year as governments try to boost economic growth. If we will see the easing of liquidity in the property sector and a pickup in credit growth. And they also mentioned that the China equities valuation is at a very attractive level. However, we FSM want to think that investors should not rule out the near-term volatility as well. Portfolio allocation wise, they favor Chinese consumer-facing business with a strong brand value and pricing power. Although these companies may see a short-term pressure given the current weakness in consumption, and some other sectors, including tech, infra, and cyclical, are some of their picks as well. So due to technical reason, I have a sheet on the left-hand side. No worries, if you want to look at the fact sheet and the more comprehensive view, feel free to launch to our FSMOne website and search on this one, so you can able to generate the fact sheet, product highlight sheet, and the prospectus. For sector equities, we have quite a number of new categories for you to provide some insights when you are trying to pitch on the certain to some extent when we are trying to look for these kind of sectors. We have created Asia X Japan Small Cap, which is the new, which is the winners for this one is the Afin Huang Select Asia X Japan Quantum Fund. And the Malaysia focus, we have already mentioned just now, Kenanga Growth Fund Series 2 is our new winner for this category. And our new winner for Malaysia's small to medium company is a Khaw Vision Fund. Meanwhile, as I already mentioned earlier on the presentation, Manila Global Aqua Fund is a winner for Global ESG Water Team. Well, I'll start my introduction with Aham Select Asia X Japan Quantum Fund. So based on the fund manager, reopening play across regional small cap space could be the market catalyst in the near term, and China's sell down recently has made the valuation become more attractive. One thing to take note, I think is applicable for most of the Aham funds, which they are currently holding a significant amount of cash to allow the portfolio to be resilient on the market volatility. While for Kenanga Growth Fund Series 2 is our recommended funds for Malaysia focused equity. Overall for Malaysia, they adopt a defensive strategy, but they will look to cash gradually, focusing on the company's fundamentals remain solid. They prefer sectors such as consumer discretionary, financials, industrials, and commodities. For structural growth teams such as tech, they are still buyers on the market weakness for its longer term potential and positive order outlook. The fund manager is still positive in the Malaysian market, and he thinks some of the market catalysts which could drive the fund's performance include economic recovery, Malaysia to benefit from the relatively higher commodity prices, major infra project rollout, as well as a very low foreign holding. Well, for Khaw Vision Fund is a winner for Malaysia's small cap category. The fund manager has turned more cautious towards outlooks of risky assets, given the global uncertainties. Nevertheless, they still believe there are pockets of opportunities within the Malaysian equity space. What I can say the biggest difference between this fund and the other Malaysian equity funds is the fund manager is quite overweight in the oil and gas sector. And last time they mentioned that they have become a buyer on a tech with such an attractive valuation now. So some of the justification given why they are overweight on the oil and gas sector is the biggest capex from Petronas in 2022 and the elevated high oil prices we see today. Well, Kenanga Share Growth Opportunities won the sector for Malaysia's small cap Islamic. If you look at the key investment teams, actually it's more or less similar with the previous fund that I mentioned, which is Kenanga Growth Fund Series 2, as both are the same fund manager. So due to the time constraint, I will skip this fund introduction. Next one, the Manulife Global Aqua Fund is a winner in Global ESG Water, and it fits into the BNP Paribas Aqua Fund. Some of the key investment teams, including a regional infrastructure stimulus investment, will continue to provide a supportive backdrop for the growth in this sector. And just for information, EU, European Union has committed approximately 750 billion COVID-19 recovery package, with over 1/3 of the capital being allocated towards the meeting the green objectives. In the US, various infrastructure bills suggest that there will be a spending carve out dedicated to the upgrading water system and including investment in the water-related sectors. Next, I will recommend some of the fixed income global, which is the MAMG Global Income I Fund. And we have introduced new categories in the PRS, which is a moderate Islamic and growth Islamic. And the Manila Shire PRS Moderate Fund and Manila Shire PRS Growth Fund is the winner in this category. So MAG Global Income I Fund is a feeder fund that fits into AZAC Islamic MAMG Global scope. In terms of portfolio allocation, the fund slightly tilted towards the high yield short duration bond funds. The fund managers overweight GCC, which is a Gulf Cooperation Council, as you can see from the fact sheet beside. Basically, it's about all those Middle Eastern Europe, there's those countries, the UAE, Iran, that issue a high yield corporate and a bank debt on the back of a high energy prices. We also believe that the GCC economies will be able to attract increased investment flows as the investor will look to benefit from improving fundamentals of the high yield issuers. Another factor for being overweight in the high yield is due to a low duration characteristic, as he believes inflation will continue to elevate in the near term, which will limit the upside on the investment grade debt. Well, if you have noticed the list that I showed you just now, we do recommend some of the core portfolio and supplementary portfolio. So maybe you ask me, hey, what is the difference between the core portfolio and supplementary portfolio? I will use this nasi lemak to explain to you what's the difference between these two. So basically, when you buy a nasi lemak, what is the key features in a nasi lemak? That if you don't have these things, you totally cannot be called as nasi lemak. It's definitely the nasi, which is a rice. So the rise is what we call as a core portfolio in your investment. So in your investment, we do recommend you to gain some exposure in those kind of broad, those kind of regions. We have a broad exposure to diversified sectors. Because let's say you are very overweight in a tech sector that you believe in the future tech sector must be an ace, it must be have a really good performance in the future. Then you all in and what we call as in Chinese sailang, you sailang into the tech sector. Then yeah, when the market is good, it generates a good return. But what happens if the market is bad? Then it will give you a very bad times. So we FSMOne, we always encourage investors to take a diversified approach in order to build their portfolio. So we recommend you to have a core portfolio. Let's say you are quite a balanced investor. You take 50% on a core portfolio, while those drumstick, maybe you are like, oh, I like China as well, so I allocate maybe 20% to China as a drumstick. Then you are like, yeah, tech sector, oh, I do like tech sector as well, then I allocate maybe 10% as ikan bilis for tech sector. Then it builds your final portfolio that give you the most resilience and consistent over a different time period. So how do the recommended unit trust fit into our 2022 house view? If we follow our FSMOne website, we do come up with this kind of research article often, and we do recommend certain regions. Some of the regions that we think worth to take a note are Asia, ex-Japan, and China, including Hong Kong, South Korea, and Taiwan. While Europe, healthcare, Japan, Indonesia, Malaysia, and Singapore, we do think that is attractive and we recommend a market fit. While for digital economy, India, Thailand, US, we are slightly neutral on this kind of market. Well, some of the funds that fit into our investment team, including the first one, the Asia and Emerging Market, with Affin Hwang Select Asia Pacific Dividend Fund and Principal Asia Pacific Dynamic Growth Fund is a winner in the Asia region. While Affin Hwang Iman Asia ex-Japan Dividend Fund and Principal Islamic Asia Pacific Dynamic Equity Fund is a winner for Asia Islamic. And if you want to look on the emerging market, you could consider East Spring Investment Global Emerging Market Fund. Well, if you follow us closely, you must really know one of our favorite market is China. If you want to gain exposure in China, RHBB Cap China Enterprise Fund could be one of consideration with invest in China, and your Greater China Principal Greater China Equity is a winner in this category, and East Spring Investment Dynastic Equity Fund is a winner in the China Islamic. While ASEAN, you want to look to gain some exposure in ASEAN, you can seek for the Principal ASEAN Dynamic Growth, which is the winner for conventional ASEAN Fund, or Satuna ASEAN Equity Fund, which is the winner for the ASEAN Islamic. While global thematic in ESG, we do recommend a Manulife Global Aqua Fund. For bond investors, you could seek for the Asia bonds, which is the winner for this bond is the Affin Hwang Select Bond Fund and Meticulous Bond Fund. While if you want to look for the Malaysia bonds, you could consider Khaw Bond Fund and Malaysia Investment Bond Fund, which is a winner for Malaysia conventional bond, and Amanah Raya Syariah Trust Fund, which is the winner for Malaysia local Islamic bond. And if you want to look for a short duration Malaysia bond, you can consider M Income Plus Fund. Well, if you think that the information just is too overwhelmed or maybe it's not enough for you, feel free to visit our website FSMOne, because we do publish this kind of recommended fund Q&A series, which is the feedback from fund manager, those who want these funds, and I definitely will give you a more comprehensive view. While on the right hand side, we research team we do write out this kind of short summary that what's our view on these kind of funds. So with that, I think I will end my presentation here. So I'll open the floor for the Q&A session. If you have that question, feel free to answer. Feel free to post your question in the Q&A box. So I will start the first question here. There are many wholesale funds that are performing exceptionally well. Can FSM also include them in the recommended funds? This is helpful for those clients who are eligible to buy wholesale funds. Actually, it's quite a good recommendation, and we will take note of that as well. As actually, with FSMOne, what's the point for our recommended funds is we want to let those retail investors to have more opportunity to seek for those good funds. While those wholesale funds, we do recommend them as well. So we'll take that into this recommendation. We will take this question to our consideration. Thanks, Steven, for your feedback. And for Khaw Tactical Fund, what is the allocation for mid and small cap stock? So for Khaw Tactical Fund, for those investors who are not aware, is the winner, one of the winner for Malaysia equity. So for Khaw Tactical Fund, if you look at the Khaw Tactical Fund and the Khaw Vision Fund, basically because it's managed by the same fund manager, so you can see the similarity between Khaw Tactical and the Khaw Vision. So I would suggest if you want to look for the more tilted towards a mid and a small cap stocks, you can stick for the Khaw Vision Fund. While if you want to look at a slightly big cap, you can look at a Khaw Tactical Fund. But just for information, based on our interview, a Khaw Tactical Fund, it has although it will generate a very, very good return. And in terms of allocation, both winners, Khaw Tactical Fund and Akin Huang Equity Fund, they have a slightly different. So I would recommend you to look at the fact sheet. And if you have any question, feel free to ask our CIS team or maybe approach our research team as well. Well, the third one, any recommended fixed income fund related to risk? At this moment, we don't really have this kind of fixed income fund that related to risk. So probably we do have two funds that related to risk, but it's a wholesale fund. So probably you can go to our FSMOne website, then you can go to our filter and filter out the wholesale fund, because in terms of risk, we do have two funds, which is I think it's quite good funds, which is a global in a global category and Asia category. But in terms of Malaysia risk, based on my personal opinion, and I think that Malaysia risk is currently on the I'm neutral on the Malaysia risk, and while I'm thinking there's a selective buying opportunities in Malaysia risk, because Malaysia, risk is always most resilient ones, and it won't affect by the global macro so much. Well, so you can think of some of the good selective. I think I will give a selective buy call for risk. So you can find those good names in risk. Well, if you want to seek for the Asia and the global funds, feel free to visit our website, and there are some recommendations there. So is there any other question? Well, yeah, there is a new question, so I read out this question. All along, FSM give a low rating for US funds. However, most of the time, US funds are better performer. Well, I do not deny the fact that US funds are better performer in the past few years, because since COVID, you have especially US tech have generated I can call it a crazy return in the last 2 years. So in terms of cumulative returns, yeah, US is definitely generate a very, very good return. While why we say we give a low rating, actually not a low rating, we think that US funds, because since last 2 years, because of the high base effect, we believe that a lot of things has already priced in. So let me give an example. Those tech funds, people price in tech, people say tech is very good. So you can see the tech price soar up very, very high. But what is the EPS? Because usually if you look at a correlation between the EPS and the stock price, usually it will be correlated in the long term. While in the last 2 years, you can see although the EPS haven't shot up, but the price has shot up so much. So what it costs? It costs the PE become very high. That's why we think that US stock is still good and US stock is still good, but for those investors who want to gain exposure in these kind of funds, they need to take consideration which is a slightly higher valuation. So the next question, what is our view on the Khaw Jade? Well, Khaw Jade fund, because it's also managed by the Khaw, which is the same fund manager with a Khaw Tactical and a Khaw Vision fund. So Khaw Jade fund, no doubt, is generate a better return compared to the Khaw Vision fund. While the Khaw Jade fund, it has slightly higher volatility, which I already mentioned earlier. We also take consideration. We not only look at the performance, we also look at the risk as well. So in terms of risk, Khaw fund has, because it has a slightly higher volatility compared to a Khaw tactical fund. So end up we recommend Khaw tactical fund over Khaw fund in our Malaysia recommendation. Well, the third one, any recommendation on agriculture related fund? Too bad we don't have any recommendation on an agriculture related fund, but we do have a fund that we call Global Resource Fund, RHB Global Resource Fund, but the fund is a wholesale fund. So too bad for retail fund, we don't have any recommendation on agriculture related fund yet. So the next question. Previously, there is plenty of recommendation on funds related to teams and environment. However, it has been very poor performing. What expectation you have on this fund? I will just take our new recommendation fund, which is the Manila Global Aqua Fund. So actually, this fund is just onboarded this year, earlier this year, and I also access to this fund as well. So what's my opinion for this kind of fund is, if you look at a fund, you need to look at if you look at the Manila Global Aqua Fund, you look at the fact sheet, you could notice that the Manila Global Fund, their benchmark their benchmark MSCI World is very overweight on those IT, tech, those consumer. While if you look at Manila Global Aqua Fund, it's very overweight on industrial and healthcare, which is more towards the water-related themes. Well, ESG is definitely a rising theme, and what we are seeing recently is because of the Russia-Ukraine war, the commodities pricing has soared so much, and people start to tilt towards this kind of traditional energy. But if you look at the very long term, definitely sustainable themes is definitely a future for that. If you can imagine the past, maybe the first time of industrial revolution, people have evolved from using a steam to electricity to oil and now people are starting to look at this green energy, because the green energy are the one who will be very sustainable, sustainable energy. So what expectation I have on these funds is, I deny the fact that recently is underperformed compared to the global peers. But if you look at a very long term, definitely the future is there. So for my personal opinion, I'm very confident on this kind of ESG related funds. And just to add on, you don't often see a fund that outperform MSCI World, because just for information, if you have some financial background, maybe you have heard of efficient market hypothesis, which US is one of the very efficient market that you price in those news very fast. So it's kind of hard for those fund managers to beat MSCI World. But if you look at the performance for the Manila Global Aqua Fund, it consistently beat the MSCI World, which I think is quite a good indicator for me. So my next question, if you want to invest for long term, is it ETF better or funds better? Actually, you're not the first one to ask me this question. ETF is better or funds is better? Some people may argue that, oh, you invest in S&P 50 years ago, then it generated a return better than a lot of funds. Yeah, I do agree with this fact. But what the point we invest in a fund is because we want to seek for the higher return. We are not satisfied with a benchmark return. And what difference between the ETF and funds? One of the huge differences are ETF is an index of funds is the pool of funds that decide by the fund manager which one to buy. So let's say for US ETF, let's say one of the stock we have a higher weight, let's say for a stock A with a higher weightage, maybe a 9% or 10%. So let's say if the stock are short by some big hedge fund, they are very bearish on this kind of stock. So what ETF can do, ETF can't do anything because they are following the index. While the fund based on the fund manager discretion, it can think that, oh, maybe this stock, the valuation is too high, the profit is there, it's already there, everything is priced in, and he wants to exit on this stock. So the fund manager, in terms of this kind of case, the fund manager can perform well. So so back to the question, if you want to invest in a long-term ETF better or funds better, actually it don't have a answer for that. It's based on your risk appetite. Let's say you want to have be a passive investing, or you want to seek for active investing, to seek for the what we call as alpha in the market. So next one, are you suggesting a Manila Global REIT fund? Yeah, I do think that Manila Global REIT fund is quite a good fund, because it's in the past few years it has generated quite a good return as well. And any recommendation for Indonesia and outlook? Indonesia and outlook. Okay, so basically for Indonesia is going to be a rising stars among the ASEAN if we ASEAN X Singapore, because if we need to exclude Singapore as is a developed market already. So we look at the ASEAN 4, which is Indonesia, Malaysia, Thailand, and Philippines. Definitely Indonesia, we are very overweight on Indonesia because Indonesia, you know, is one of the commodity exporters and new economic teams is there. But what is the outlook for, let's say, for this year? We think that Indonesia, although we are bullish on Indonesia, but we think that this year the valuation is slightly expensive already. So if you want to invest in Indonesia, probably need to consider a bit. If you want to know more, we do have an article about Indonesia, and feel free to visit our website fsm1.com.my and click on the research article. We do have an article for that Indonesia. So basically, in the past few months, we wrote an article for that, and we have consistently to update the market. So the next one, the principal Greater China shows allocation on the mid stocks. What is a mid stock? Is it a mid cap or a small cap stock? Does this fund invest in a big cap stock? Yeah. Also, a lot of people will ask me what's the difference between the principal Greater China fund and RHB big cap fund. Why you want to segregate the China into a China and Greater China? So you want just say purely China. Usually what we refer to is China and Hong Kong, while Greater China including Taiwan as well. While the principal Greater China shows allocation on mid stocks is based on the fund manager, he thinks that a lot of big cap names is slightly expensive at this juncture, and he start to look towards a more balanced, which is what we call as a barbell strategy, which look for the mid cap stocks. And also, he will gain some exposure in the large cap as well if you look at the fund fact sheet. Yeah, so does this fund invest in a big cap stock? Yes, definitely it is. Just in terms of portfolio allocation, principal Greater China is slightly tilted towards the mid cap stock, which in other words, have a higher exposure in the mid cap stocks compared with the RHB big cap China. So next question, what is your take on China and Hong Kong tech funds? Yeah, dropped a lot. Throughout the years, China, because of regulatory crackdown, the China and Hong Kong tech funds is not really performing well. But just as I have mentioned earlier, you want to invest in a fund because you look at the long term. You want to look at long-term return. Well, China and Hong Kong tech fund, yeah, it dropped a lot. But what's the different story? China and Hong Kong tech fund is dropped a lot means that it's so cheap to buy. You don't see a China and Hong Kong tech fund, the valuation is so cheap, so that often. So what is your take on China and Hong Kong tech fund? I would recommend you to first you need to take a look on your overall portfolio. And if you have some spare money, I would recommend China and Hong Kong tech funds. Actually, I'm kind of bullish on these sectors. So next question, any recommended fund that helps us to capture opportunity in the cloud computing space as it has a long run away? For the global technology fund, we do recommend TA Global Tech, and if you are capable of a wholesale fund, you can consider a principal global tech as well. If you just want to focus on a cloud computing, this kind of niche market, actually it's quite a niche market. So at this moment, we don't have a fund that really focus on this cloud computing space. But we do have an ETF for that. So probably you can look at the ETF and seek for some investment opportunity. So next question, what do you think on Malaysia big cap versus Malaysia small cap fund? Which is the more performing in the coming year? Actually, it's kind of a hard question because Malaysia big cap usually comprises of those big names, including banks, plantations, consumer. So I will focus on this sector. Banks, you have already seen the banks have a very good time in the past, in earlier year, because the market is already expecting a rising rate environment. Well, in the coming year, maybe you want to think that is bank already priced in, because as I mentioned just now, if you look at the dot plot, markets has already priced in the 2023 and even 2024. There is a rate cut over there because of a recession fear. So for financial, if you want to invest, yeah, financial do have a great outlook as well, but valuation wise, it has become not that attractive anymore. While for the plantations, it is the same problem in the past few months. in January, plantation still have a very huge divergence between the plantation stock price and the EPS. But in the past 2 months, I think 2 or 3 months, and actually the soaring commodities prices or the plantation stock has already been priced in. So at the as of last day, plantation stocks is kind of underperformed compared to the previous peak. So in a reason, I don't think there is any market catalyst to push up these kind of plantation stocks. So what about Malaysia small cap? Usually when we talk about Malaysia small cap, we talk about Malaysia tech or even those slightly small companies. Well, Malaysia small cap definitely it has a more volatile and actually if you want me to answer you which is more performing in the coming year, I would suggest you to take a more balanced approach between Malaysia big cap and Malaysia small cap, as the market currently is quite volatile and a lot of uncertainties are there. So next, what about M China A-Shares Fund? Still under recommendation from FSM. Actually, we do recommend an M China A-Shares Fund, and we think that if you want to invest in a special China A market, we do think that M China A-Shares Fund is the best fund among all the peers on the A-Shares sectors, on the A-Shares region. Well, because M China A-Shares Fund is a wholesale fund, so we do not publish it on our website. But based on, I do think that M China A-Shares Fund is quite a good fund for you to consider. So the next one, what is your view on the China economy, especially tech fund? Well, China tech. Okay, so for China tech, last year has been a very tough year for China, and for China tech fund, I would think that the market is already the valuation is already at a very attractive level. So if you do have some capability, you could seek for gain some exposure in the China tech fund. But do note that the reason I believe most of you guys already know. Last day, a lot of global volatility, especially the rising geopolitical tension, have occurred. So if you want to invest in China, especially this kind of niche market China tech fund, you need to consider, are you capable to take this kind of volatile in the near term as well? But in the long term, I will definitely give a very bullish call on China tech fund. So that's all from the Q&A session. So is there any question? Okay, so since there are no any open questions, thank you everyone for attending these webinars. And if we do have, sorry, there's a new question here. FSM recommends so many funds. Is a challenge for us to even select from the recommended funds. Oh, okay. I will take it as a compliment. So FSM recommends so many funds. Why we want to do so is because different people will have a different risk appetite and different preference. So we want to recommend this. We want to segregate this into these categories, all these categories, because we don't want the investors just for our call. Let's say we are over or we are on some regions, and we want to mislead those investors who think that, oh, they can silent, they can all into this region. That's why we recommend so many funds, because in FSMOne we always emphasize on the diversification. And remember, diversification is a key for investment. I still remember when I just entered this investment industry, my senior has already told me, you can control the risk, but you can't control the return. So let's say you are always on a certain regions or certain sectors, you are always on it because your assumption, those market catalysts will eventually price in and push up the price. That's what we call as a return. But what's about the risk? Let's say if something that you cannot expect happen, let's say for the Russia-Ukraine war, we expect it to happen at all. So market things happen, it will crash your portfolio. So why we recommend so many funds is because we encourage you to take a more diversified approach. And based on the nasi lemak story I tell you, build your own nasi lemak, which is your investment portfolio. So since there are no any question, since now ringgit depreciation is a concern for us, what is your view for Malaysia outlook? Okay, so ringgit depreciation is a concern. Yes, it is, because US people are expecting to rise a very aggressive high, while Malaysia to have a gradual rate. What is your view for Malaysia outlook? In terms of export, definitely it's better for Malaysia because uh, let's say if our ringgit appreciate against US, then exporters, those importers, other countries, they can buy Malaysia things with a cheaper price. So in terms of demand and supply, they will import more and we will export more. Well, for Malaysia outlook, I will assume general outlook. So for Malaysia outlook, we think Malaysia is quite, I don't know use this word stable or not, but Malaysia is quite independent and or isolated from the global uncertainties because Malaysia, we have our own economic system and we do have, despite see China, they are facing a few weeks ago, few months ago, they are facing a zero COVID policy, and US, they are facing an overheating inflation. If you look at the EU, they are also facing some high employment rate and overheating inflation as well. But if you look at Malaysia, we are having a kind of stable economy. If you look at unemployment rate is based on last year data, 3.9%. Inflation rate 3%. So actually, it's quite stable compared to the developed market. So what is your view on Malaysia outlook? At this moment, Malaysia has a very low share, low foreign holdings in terms of equity market. And why we say so? Because everyone is anticipating GE, which in the year end 2022 or even next year. So usually when this kind of political uncertainty, usually a share market will the foreign shareholding will be kind of low relative to other years. And also need to take note that EPF, which is one of the big players in Malaysia, local institution, as people withdraw a lot of cash from EPF. So EPF are not able to invest a lot of money in the Malaysia equity market. So Malaysia equity market is already at a very low level, and if you look at the valuation, it's a kind of attractive as well. So when the catalysts come in, I think that for the Malaysia equity market, it will have a good rebound for the Malaysia equity market. So for the next question, do you mind to summarize the take-in for today's presentation? Sorry, we don't have a summarize for the take-ins for today's presentation, but if you want to look on some funds that you are really interested in, feel free to visit our website as we have published this kind of Q&A set questionnaire. And if you want to look at a summary kind of version, you can look on our research article. We got a column there, which is the recommended funds. So you can look at our overall recommended funds and the summary at there. So, next question, some funds have both hedge and non-hedge. How often does the fund house renew their hedging contract? Is it every 6 months, yearly? Basically, this question, I'm afraid that I don't have the answer because these funds house, they have a different kind of strategy. So I don't have an answer now. But usually they will renew the hedging contract with a very consistent basis. So since there are no more questions, yeah, thank you everyone for attending this webinar, and I hope you guys found something insightful today. And feel free to visit our website if you do have any question or want to look for any information. Feel free to visit our website. Yeah, that's for my presentation today. Thank you.